I've been cautious about these because they were breaking out. And as I always say, when you get a breakout from an extended level, it's often sold into. That's what happened with that first test of the SPY right here, and we sold off really hard. So back to the financials, we're not selling off yet, but we still have the pattern in here of these higher lows. So if you're long in here, you want to raise your stop up underneath these higher lows. I think for next week, though, you've got to be very careful that we're in fact going to see a little bit of selling pressure if we see this happen. If we see a lower high, then a lower low, I would not go near these until probably, until it shows me signs of stability. That stability might come down near this 5-day moving, the year-to-date anchored volume weighted average price, which is that blue line. We might come in like this and we might touch it perfectly and bounce. I wouldn't buy it because we might do something like this. I want to see that 5-day moving average come down, maybe get rejected at the 5. Then the 5-day moving average flattens out. It breaks higher here. Then you want to be a buyer again of the financials with a stop under there. If instead it just keeps declining the way the XLE has, well, the same story. You just don't buy. You avoid losing money. Play a strong defense. If you can avoid losing money by not buying the dip and waiting for strength after the dip, you're going to be in a much better position than most people, and your account is going to thank you for it. If you bought it yesterday at 90, how smart do you feel today at 87? I wouldn't feel very smart at all. We're still making lower lows and lower highs below a declining 5-day moving average in the XLE.